We have Sanjay Banka, the CFO, joining in on the show right now. Sanjay, hi, good to chat with you. The festive season's here, and an extended one as that. Tell me, what demand trends are you seeing across the board?
In quarter one, we had grown 29%. We had seen a volume growth in gold also at around 8% and diamond around 35%. So we are seeing a similar good demand. I can't disclose the actual number, but we are saying that we are very happy with the way the demand has gone in quarter two, just 2, 3 days away. And it shows that the economy has really picked up. And not only the urban economy, even in rural sector, we are seeing a good demand through our franchisee who are operating in tier 2 and tier 3.
Quite
So
a
across the gold, diamond, even platinum, we have seen a good improvement in demand across all the geographies. So we are focusing on increasing our sales in almost all the segments.
Okay, so you're seeing good demand, especially in the tier 2, tier 3 cities. But if you could give me some more details, I mean, in terms of the growth rate for the rest of the festive season and the wedding season as well, what kind of growth rates should we pencil in?
Yes, obviously. See, the festive season, that is quarter three, is the main pillar of revenue for any jewelry company. So we are seeing a very strong demand in quarter three, and a major part of our revenue and fact comes from quarter three. So we are very hopeful for a good quarter three. We have started building up the inventory. So there are two periods in the year when we build up the inventory and deploy our maximum working capital. So whatever funds we have raised from IPO, that has been deployed for the working capital. Almost all the stores are now full. We also procure additional festive limits from the banks. So the stores are ready, the team is ready, and we are here ready to serve our customers. And particularly in the new locations where we opened the stores. So let's say in Hyderabad we opened second store. We have opened two franchises in the current year. One we had opened in Bhagalpur, and in the current quarter we have opened in Ara in Bihar. So in all the new geographies also, we are very excited that the customers will come and patronize our products.
Margins, though, have been a bit subdued in the last quarter. What's the trajectory that you hope to clock in for the rest of the year?
So margin has a seasonal trend. So when we in quarter one, the margin had come down 90 basis points lower versus last year same quarter. So even in this quarter, the margin will be range bound versus last quarter. So while for the entire year we are looking at 15% gross margin trend, but in this quarter it will be similar to last quarter. So let's see once the books are closed and once we complete the entire accounting and hedge accounting, etc., then picture will be clear. But as we have said that the margins and the profitability are quite signal, and a major margin and growth happens in quarter three. That impacts the margin percentage for the entire year. So let's wait for quarter three to give a solid margin as we have been talking about.
Okay, and what is the split in terms of the studded ratio which you're expecting? Where will it settle at? Because your peers have a studded ratio of almost 25 to 30% contribution coming in. Are you also looking at such kind of mix going forward?
So studded ratio, we have said during the IPO roadshows also that we are clearly looking at increasing our stud ratio from the 10-11% range to at least 100 basis points every year. So we are looking at increasing it up to 15% at least in next 3 to 4 years. And you have seen a 100 basis point growth in the current quarter. In fact, in quarter one, we saw almost a 34% volume growth and 50% value growth. So we see a similar trend in the current year. So as we said, at least 100 to 150 basis point growth in studded ratio, we are clearly doing. And for that, it requires investment in the inventory. So we are building up our studded ratio inventory. We have launched a special diamond collection offer. So you would have seen that diamond offer we have launched in the current year, and we are seeing a good traction even in the rural areas, where it is said that the demand for diamond is not there. So we are seeing a good demand, but a very major demand for stud is coming from the north and the NCR region. So as we said, while at an all India average of 10 to 11%, in north it is around 14%, 14 to 15%, and particularly Delhi we have touched 20%. So we see no reason as to why we also cannot increase the stud ratio in North and NCR equal to the competition.
Right. Analysts are pretty positive on your store expansion as well. How many stores are you planning to add in both FY24 as well as 25?
Coming on the store expansion, our original plan was to have at least around 25 store per year, own and franchisee taken together. So even in the last earning call, we had said that 16 to 18 own stores and 8 to 10 franchisee store. That was the plan. Since the IPO happened in July, we have to talk about the trailing 12-month or forward 12-month to achieve those numbers. So let's say in quarter one, we have set up around six total stores. That means five own and one franchisee. And similarly, in quarter two, we have set up three stores, two own and one franchisee. So two franchisee stores so far we have done in the current H1, and they are both in Bihar. So we see a good, clear opportunity in Bihar. One is in Bhagalpur, one is in Ara. And most of these stores which we have set up so far in H1, they are in the outside Bengal. So we have now entered central region. We are now present in Bhopal and Raipur both. We have opened a second store in Chandigarh. So we clearly see as a part of our strategy a growth in the north and central region as well, while east region will continue to be our mainstay for our future growth strategy. So around 25 stores every year for next 4 to 5 years is what is our plan. And the number which we have said, as of now, we have touched almost 145 stores. So 136 stores we opened the current year and 9 stores. 145 stores we have touched as we are talking to you.
Right. You know, the other thing I wanted to talk about was also the competitive intensity in the jewelry industry, which is now only increasing. How is it that you're planning to gain more market share?
See, we will
Sorry.
continue to maintain our market leadership in the East region, that is for sure. As far as the other region is concerned, I think every player will coexist. All of us, all of our fellow jewelers, we have our own strength and advantages. So, be it within the organized sector or beyond the organized sector. So, what we see is that the entire jewelry sector will continue to grow at 15%, while the organized sector will grow at 20%. All of us will have our own space, but clearly we are looking at setting more stronghold in Delhi and NCR region. But the market share percentage, it will be too premature to say at this stage, given the size of the stores and the market share which we have currently.
Sure. And the company's top line has been growing at the rate of what, 12 to 14% over the last 3-4 years. What's the rate that is going to be, let's say, in the coming 5 years? Is it going to be high teens?
So in the last 3 years, we have a CAGR of around 20%, while last 5 years it was 15%. So we are clearly looking at growing in the range of 18 to 20%. And as you have seen in quarter one, we have grown YOY by 29%. So we are confident that at least 18 to 20% will grow, while our internal target will always be to achieve more than what we promised to the market. And so looking at 4 to 5 year horizon, we look at 18 to 20% growth minimum every year. And the growth will also be fueled by the new store which we have set up. The same store sales growth will also be around, let's say, 300 to 400 basis point lower, so around 17 to 18%, 17 to 18, 16 to 17% out of this will come from the same store sales growth.
Right. Your market share, as we understand right now, is around 5%, right, of the overall East jewelry retail market. What's the scope of expansion, you think?
So as we've said, we will continue to maintain our leadership in the eastern region, while obviously competition is also entering in the eastern region. So market share, as you've said, it is premature. We are only saying that we have a very solid and robust growth plan. We have capital in our kitty, the funds which we have raised by IPO, and the future cash flows. All this will help us to continue to grow and maintain the momentum. Let time decide as to what is the market share, because it's a product of the competition as well. But we are very hopeful that we will do our best to give the maximum shareholders value.
Okay, thanks so much for joining us with that detailed discussion as to what the company strategy is regarding expansion, market share, as well as what the ratio of studded jewelry to gold is going to be in future. Appreciate your time today.